Hello, very good morning to all, and welcome to today's Daily Dose of Market Insights. I'm Kelvin here. Very good morning. Today will be Thursday, the 17th of April 2024. So before we kickstart our Daily Dose of Market Insights, let's have a quick look at the disclaimer first. All right, leverage trading carries a high degree of risk and may not be suitable for everyone. Losses can exceed deposits. This presentation is not an offer or solicitation to buy or sell, nor financial advice or recommendation for any investment product, as well as any forecast, prediction, or projection in this presentation is not necessarily indicative of the future or likely performance of the product. This advertisement has not been reviewed by the Monetary Authority of Singapore. So as usual, before we jump straight into the short-term intraday technical outlook on the various broad-based cross-asset classes, let's have a quick look at the intraday performance of the major stock indices, the major dollar pair, and the two key commodities market that we cover on a daily basis, XAU/USD Gold and West Texas crude oil. What has taken shape yesterday that impact their intraday movement, and as well as any potential, we call it a news flow, that could actually influence the movement of this asset class for today early Asia session as well. So let's kickstart with the performance of the major US stock indices yesterday. So those who followed my daily dose of market insights on a daily basis shouldn't be a big surprise for the yesterday's across the board sell-off in the major US stock indices, because since late last week, we do mention that whatever minor bounce that we see on the US stock indices are likely to be minor corrective rebound sequence, i.e. dead cat bounces, within a medium-term downtrend phase that's still intact on the major US stock indices, reinforced by this uncertainty of the way Trump administration, that means i.e. the US White House administration, in conducting their implementation of their reciprocal trade tariffs. And yesterday's we see across the board sell off. So the worst hit was the Nasdaq 100. So that is we no doubt as well, because why? Because the Nasdaq 100 is heavily centric by technology growth and semiconductor play. So the Nasdaq 100 created yesterday down by negative 3%, and this was worst hit by the semiconductor sector, where Nvidia is down by negative 7%, and at one point in time on the intraday basis, it has a maximum loss of negative 10%. Yes, in yesterday US session. So one thing to note over here is that I highlighted in yesterday daily dose, because of these tit for tat measures between US and China. US White House administration actually instructed Nvidia to ban its lower tier semiconductor chips to its China market, and we know that the China market is also one of the key revenue driver for Nvidia, so that should explain the fall. And on top of that, not even Nvidia has this negative, we call it a vibe in this technology sell-off yesterday. So yesterday technology sell-off stocks spread to the rest of the world, so it has that kind of a major risk-off sentiment that is being inflicted in the global market yesterday, has also been driven by this rather lackluster earnings guidance out from ASML. So who is ASML and what is ASML? So ASML is in fact the world's largest semiconductor chip making equipment supplier based in Europe. So it's also one of the very important key semiconductor play. So any negative news flow coming out from ASML will also trigger a risk of impact on the major stock indices. Because why ASML is important? Because it's part of the a semiconductor team play, and we know that semiconductor stocks team play has been driving the global stock market rally that is centered on the Nasdaq 100 post pandemic. That means since 2020, and last 2 years it has been much more magnified due to that AI productivity team play. So with all this kind of we call it lackluster earnings guidance out from these players, and any news flows that have a negative potential revenue impact on these players will trigger a widespread risk of sentiment. So yesterday ASML in its earnings announcement warned about its earning growth prospect for the outlook of 2025 and 2026. So that actually reinforced that negative feedback loop into the risk of sentiment yesterday that has been depicted by across the board sell off in the major US stock indices. So the S&P is down by negative 2.2%, the Dow Jones down negative 1.7%, and the Russell 2000 down negative 1%. So across Europe, we also see across the board sell off in Europe as well, where the Euro Stocks 500 is down by negative 18%, a much more smaller amount over here. So what's interesting over here is that during this risk off scenario, the dollar continues to plummet over here. So I could see that if you look at the dollar index yesterday continues to actually inch downwards and shape another lower low. This is the US dollar index on the daily time frame. So the dollar index yesterday shaped negative 0.8%, negative 0.8%, and this negative 0.8% has been primarily driven by a safe haven currency. So i.e. the Japanese yen and the Swiss franc actually outperformed the US dollar by shaping a rally of 1.2% to 1%. So what do I mean by this? So if you look at the dollar Swiss franc over here, so the dollar Swiss franc actually plummeted negative 1.2%. That means, i.e., the Swiss franc gain the dollar has a 1.2% gain in the dollar. And if you look at the dollar yen over here, okay, the dollar yen actually gained 1% against the dollar yen actually lose negative 1%. That means the yen is gaining 1% against the US dollar. So yesterday's dollar weakness is primarily driven by safe haven currency demand, where the Swiss franc and the Japanese yen gain about 1.2% and 1% against the US dollar. And with that also, we start to see a further rise in gold as well. So during this broad-based risk off sentiment, we see gold price yesterday added on to another tremendous rally of 3.51% to stage another record closing high, fresh record closing high at 3,343. And in today's Asia session, it tried to actually trade near yesterday's record closing high at 3,338, down by a bit by negative 0.13%. So what I could see over here is that in today's Asia session, okay, as we are speaking right now, there is a bit of relief in yesterday's risk-off sentiment. Gold is now not rallying; it's actually now staging a minor pullback of negative 0.15%. So, what causes this relief in yesterday's broad-based risk-off sentiment is because of Trump himself again. So, Trump, after the close of yesterday US session, he, as usual, via his social media account, he actually tweeted saying that he touted big progress in talks between US and Japan. So yesterday's US officials and Japan officials has their first US trade negotiation talk. Yesterday was the first day, today will be the second day. So he touted progress that's being made without stating what are the progress. So market view this as a relief rebound rally because of this big progress statement that is being touted by Trump himself that causes yesterday's risk off to subside, and we start to see in Asia across the board gain in today's Asia session. So what do I mean by this? So if you look at today's Asia session over here, the Nikkei managed to rose by 0.86%, the Hang Seng 1.28%, and the rest of the other Asia indices also rather rosy as well. So the Kospi is up by 0.5%, and we have our local STI up by 1.33%. So all based on this big progress tweet by Trump after the close of yesterday's US session that actually kind of offer a relief rebound in the Asia benchmark stock indices. And even right now, as we are speaking, the E-mini futures on the S&P 500, that means the futures on the S&P 500, which is the E-mini futures, and the Nasdaq 100 E-mini futures, both are up by 0.6% each, all right, as you are speaking right now. So that actually also explained to us why the gold price actually do a minor pullback in today's Asia session. And also, if you look at the 5-day rolling performance or the 1-day rolling performance of the dollar against other major currency, is actually now shaping a bit of a bounce as well. Okay, after yesterday's sell-off in the US dollar index over here. So the key question over here is that, can this temporary risk-on sentiment triggered by Trump's so-called big progress that's being made between trade talks between Japan and US sustainable? I will cover that in my intraday technical outlook on the major stock indices in a while time, to highlight to you all the trend bias and the key levels to watch out for. All right, and in the longer term basis over here is that, in order for this risk on in order for this we call it risk off sentiment to subside, that means i.e. for the major US stock indices to stage a medium term bullish reversal to scale fresh all-time high again, we got to see the Fed to be more generous in offering liquidity. That means start a called aggressive interest rate cut cycle. But unfortunately, that may not happen in the near-term horizon from the latest public statement by Fed Chair Powell himself. So Fed Chair Powell yesterday, he did mention that the Fed, in his public address to the Economic Club of, I think, Chicago, yeah, he actually made a public statement yesterday saying that his public speech, I would say, saying that the Fed still remains in a wait and see mode. Markets processing policy shifts. So what it means that over here is that, one second. Okay, so after Powell spoke, the US stock extended their losses afterward. So based on the entire speech, people were expecting Powell to be neutral, but he was hawkish instead. All right, so he highlighted heightened uncertainty. So what it means over here is that the Fed is in a wait and see mode. That means they are in no hurry to kickstart another interest rate cut at this juncture. So with that in mind, if you look at the CME Fed Watch 2, so in this next FOMC meeting, they're going to take place on 7th of May next month. So that's about 2.5 weeks from now. Market has a high pricing a high odds that the Fed will remain stamped despite the weakness that's being seen in the US stock market in the last few weeks. It will remain stamped at 4.25% and 4.25% and 4.5%. All right, stamped, that means unchanged with a high percentage at 86% chance as being priced in by the CME Fed Watch 2 based on the latest calculation in the Fed Funds futures contract market participants price action behavior. So reinforced by Fed Chair Powell rather hawkish tonality yesterday, because of that potential sticky inflation caused by Trump's we call it haphazard the US. I'll say that the current White House administration way of dealing with the implementation of this whole slew of different kind of US trade tariffs against the rest of the world. Okay, that is the key news flow and data to take note of. And one more data that came in today's Asia session on the highlight is more pertaining to Australia. Okay, so Australia key data came in at 9:30 a.m. Singapore time today. So the employment change data on a monthly basis for the month of March, market is expecting a higher number of jobs added, 40K, pardon me, but it only came in at 32.2K. All right, a much more lower number. Unemployment rate remains better, actually remains better than expected. Market is expecting higher to 4.2%. It came in slightly lower at 4.1%, but still above the previous month of unemployment rate at 4%. All right, so then overall, we start to see a bit of softness in the Australia labor market. So that also causes the Aussie the Aussie dollar to actually inch slightly lower in today's Asia session over here. So if you look at the 1-day rolling performance over here, what we could see is that the Aussie dollar actually this is the dollar, means not this is the US dollar. So the US dollar against the Aussie actually rose over here. Then thereafter it starts to trade sideways as we are speaking right now. All right, over at this juncture. So there was a bit of dollar strength coming back into the Aussie dollar, and so far it hasn't break above the 64-figure medium-term pivotal resistance that we highlighted earlier yesterday. Right, so later I'll touch on this short-term intraday technical outlook on the Aussie dollar. So I could see that if I plot the dollar against the Aussie, that means dollar as the base currency, there was a dollar strength coming back into the Aussie dollar in yesterday's US session, and thereafter, as we are speaking right now, the Aussie just traded sideways for now. All right, so later I'll touch more about that. All right, so if you look at the 5-day rolling performance basis, so very clearly the dollar strength has started to creep back against the Aussie. Okay, higher low. Okay, bear in mind this is being quoted as $1 against how many Aussie, right? All right, so that sum up the first session of today's daily dose of market insights. Let me now cover the second session, which is the intraday technical outlook on all the broad-based cross asset classes. So with that, let me expand my screen first. All right, over here, good. So now let's start with the FX market. Right, so this is start with the euro dollar. So the euro dollar yesterday rallied as expected, hit our first resistance level at the not much of a big gain at 1.1380 before it starts to trade sideways again. All right, so bear in mind today there will be a risk event that is very directly linked to the euro dollar, which will be the outcome of ECB monetary policy, where market expecting another rate cut. But this rate cut itself might be one of the few last rate cut on ECB by ECB because of that rather aggressive fiscal stimulus plans or policy that is upcoming soon from Germany, that could actually be in the front seat now of elevating previous weak economic growth in Eurozone. So fiscal policy now will take over expansionary monetary policy in Eurozone. All right, so that could be one of the last few signs that ECB may be, today might be the last interest rate cut by ECB. All right, so with that, market has starts to price in a rather we call it a bullish movement on the euro dollar yesterday. Continues to trade a series of higher low after that bullish breakout from this former minor descending trend line on Wednesday itself. All right, on Wednesday, okay, early Wednesday itself, it broke up from here. Okay, so with that, we will still maintain that intraday bullish bias on the euro dollar. So I don't want to put it so tight. So yes, first support level to watch out for will be yesterday's Asia session. Yesterday's European session low will be at 113.40, which is markets managed to shape a higher low right now as we are speaking. Okay, you can see there's a higher low being formed, higher than this low yesterday. So 113.40 will be the first support level to watch, but I do not want to put it so tight. So I will still use the pullback line of this former minor descending trend line, which is also yesterday's pivotal support level at 112.40 to maintain our bullish bias on the euro dollar. Next resistance level to watch out for will be the swing high area of 11th of April, which also confluence with the intermediate resistance zone of 114.80/115.20. So above 115.20 may see the next intermediate resistance zone coming in at 116.60. 1690 next. Only a bearish reversal and a breakdown with hourly close below 112.40 will invalidate today's intraday bullish bias to trigger off a minor corrective decline sequence, exposing 111.50 followed by 110.70 next. So that's for the euro dollar, still maintaining our intraday bullish bias using 112.40 as my short-term pivotal support level for today. Next up will be the British pound, the sterling dollar over here. So the sterling dollar push up as expected, hit our first resistance level, almost give or take, at 133.10 level. So this 133.10 level yesterday printed a high of 139.92, so it's almost hit the 133.10 intermediate resistance level over here. So with that, in Asia session, it managed to stage a bounce and bounce off our first support level at 132 level, okay, 132 figure level, all right, as we are speaking right now. So still maintaining that. Of course, I don't put it so tight because of the ECB announcement later, ECB monetary policy announcement later, that could create an increased two-way volatility in the FX market that could also impact the sterling dollar. So I'll still maintain that pivotal support at 131.20 over here. So 131.20 will be my short-term pivotal support on the sterling dollar, still remains unchanged. So above 133.10 may expose 133.70 / 33.90 next on the sterling dollar. Only a sudden push down and an hourly close below 131.20 that would trigger off a start of another leg of minor corrective decline sequence, exposing the next near-term support level at 130.30 / 29.80, which is confluence with the rising 20-day moving average as well. Below it sees a further dip down towards 129.25. So net overall, still maintaining that excuse me, still maintaining that intraday bullish bias on the sterling dollar, using 131.20 as my short-term pivotal support level. Next up will be the Aussie dollar. So the Aussie dollar, if you look at the hourly chart itself, it continues to be hesitant below the 63.90, 64 medium-term pivotal resistance level, which is the former major trend line support, now turns into a pullback resistance from the low of 13th of October 2022 low itself. The hourly RSI continues to display that bearish divergence over here, and right now is actually trying to inch back below the 50 level mark. Over here, there's a 50 level here, so anything that's below 50 indicates the chance of a bearish momentum coming back into the play, and reinforced by this bearish divergence as well that's being seen on the hourly RSI. Okay, so yesterday price action try to shape a higher high, okay, but the RSI show a bearish divergence, okay, indicating a lack of upside momentum, and this momentum may now transverse into a bearish momentum scenario. So still no change, watching the 63.90, 64 figure as my pivotal resistance level. For today, I have a first Titan short-term pivotal Titan short-term near-term support level at 63.20 over here, which is the minor swing low of Tuesday and the minor swing low of Wednesday, where it managed to survive before it bounced up. So let me put it in writing, 63.20. Okay, 63.20 over here. So only a breakdown below 63.20 increase the odds of the start of at least a minor slide on the Aussie dollar to expose the near-term support level at 62.80 / 62.50 for today, which is correspond to the 50 and the 20-day moving average, I think a similar support level as well. A breakdown below 62.50 unless a deeper minor corrective pullback towards 61.90 / 61.70 next. Okay, so this level, if I do the Fibo retracement of this 0.8% rebound from the 9th of April high all the way to yesterday intraday high, that correspond closely to the 50% Fibo retracement. Only a squeeze up above 64 figure level pivotal resistance will invalidate today's intraday bearish bias to see a squeeze up towards 64.70, which is so the 200-day moving average, I think, as a similar resistance as well. Above it may start to see a much more pronounced rally, exposing the next intermediate resistance level in first step at 65.20 / 65.40. So that's for the Aussie dollar. So watching the 64 key medium-term pivotal resistance in light of this ongoing or looming bearish momentum that has cited on the Aussie dollar, with the first near-term support level that you got to break down at 63.20, thereafter potentially exposing 62.80 / 62.50 next in the first step on the intraday basis. Lastly will be the dollar yen. So the dollar yen plummeted and broke below this bearish pennant formation, hit our first support level at 141.70, 141.55 before staging a bounce back again. And right now it starts to have that bearish reaction of this former bearish minor bearish pennant support now turns into a pullback resistance level. Okay, at this level here at 142.95, 142.95. So with that, I will have a Titan key short-term pivotal resistance for today. Okay, at this 14110 level. Okay, 14410 level, pardon me. Okay, previously it was slightly higher at 144 144.30. So now I push it down slightly lower to 144.10 level, which is the minor swing high of that former bearish pennant formation. All right, but I don't want to put it so tight in between somewhere here at 143 or 143.50, just in case of any whipsaw. So I will still use a slightly higher short-term pivotal resistance level, but I will adjust it slightly downwards to touch the minor swing high area of 11th of April and 14th of April, which is basically the range stop of that former minor bearish pennant formation. So still keeping that bearish bias on the dollar yen using a 144.10 short-term pivotal resistance for today. Below 141.55 over here will expose the next near-term support, expose the next support level at 140.30, 140.30, 140 figure level, which is again last year September medium term swing low. Okay, September medium term swing low. All right, last September. Only an hourly close and a breakout above the 144.10 short-term pivotal resistance level will invalidate today's intraday bearish bias on the dollar yen to kickstart another round of minor mean reversion rebound sequence, exposing the next near-term resistance zone at 145.80, pardon me, 146.60. So i.e., in a nutshell, still maintaining that bearish bias with a slightly adjusted short-term pivotal resistance downwards for today on the dollar yen at 144.10. Right, so that sum up the intraday technical outlook on the major FX dollar pair. Now let us focus our attention to the major stock indices, starting with the Hong Kong 33, representing the Hang Seng Index. All right, so the Hong Kong 33 today bounces because of that positive remarks out from US President Trump pertaining to the ongoing US-Japan trade talks. All right, so today will be the second day of the trade talks. All right, so but nevertheless, it's very interestingly, it now starts to form a bearish, okay, this little spinning top candlestick right below our pivotal resistance that we highlighted yesterday, which was the gap down yesterday at 21,450. So with this potential ongoing hourly bearish spinning top that is being formed on the hourly RSI, we will still maintain our intraday bearish bias of it for sure because of that negative reaction price action that is in play right now because of from this small little candlestick body. We call it a bearish spinning top. All right, so now no change, 21,450 as my short-term pivotal resistance level. First support level to watch will be yesterday's minor swing low at 20,840. Okay, let me put it in writing. 20,840. Okay, why is it so slow? Okay, give me a couple of seconds. Yeah, good. Okay. 20,840. Okay, only a breakdown below 20,840 will trigger off a much more pronounced decline to expose the next near-term support level at 20,280 level. All right, so what I could see over here is that potentially after a 1 2 3 4 5 wave up move, it's now doing a potential minor correction, at least to correct the previous 5 wave up move. So if you do the Fibo retracement of that prior up move, the low of 9th of April all the way up to the high of 14th of April, the 20,280 support level confluence with the 50% Fibo retracement. All right, so these are the key levels to watch on the intraday basis. So however, if price action starts to have an hourly close, that means thereafter it starts to pierce up further at 21,450, then that intraday bearish bias will be invalidated to see the continuation of this ongoing recovery to hit the next resistance level at 22,740. Above it may see the next resistance zone coming in at 22,220, 22,500, which correspond to the 20-day and the 50-day moving average very closely as well. Right, so that's for the Hong Kong 33, watching the 21,450 short-term pivotal resistance to maintain our bearish bias. First support equal to breakdown will be 20,840. All right, next up will be the Japan 225 representing the Nikkei 225. So almost hitting our first support level that we highlighted to 33,440. It staged a bounce, all right, in today's Asia session because of that Trump positive remark that's being made during after the conclusion of yesterday's first session of the US Japan trade negotiation talks. All right, so with that, still using the 35,190 slash 35,730 short-term pivotal resistance level as my resistance level because it hasn't broke through yet. So with that, because if you look at the hourly RSI now, it's now getting positive. Okay, it managed to pierce past this former resistance, now turns into like a support level, and there is a higher low that's being formed. Okay, price action show same low. Okay, this low and this low here is the same. All right, the low of 16th of April and today's Asia session, similar low, but in parallel, the RSI starts to form a higher low. So that is a positive development in terms of momentum because it's coming very close to the pivotal resistance level already. So in terms of risk reward perspective, if we turn bullish now, it's not worth it. So I will have a neutrality stance for today. Okay, flip to a neutrality stance. Okay, so let me put it in writing. Oops. Okay, so the, I don't know why it's okay. Good, finally it's came. Okay, so neutral between 35,190 slash 35,730, and the lower limit will be close to yesterday's US session minus swing low, which is our first support level at 33,440. So neutral between these two level for now. All right, unless we start to see reintegration back below 33,440, means reintegration below 33,440, that could open up scope for another round of weakness to expose the next near-term support level at 32,425. All right, so flipping to a neutrality stance for today on the Japan 225 between 35,730 and 33,440. Okay, next up will be the German 30 over here. Okay, so the German 30 continues to bounce as well in today's Asia session. All right, over here. So now it's attempting to cover the gap again on yesterday's gap down at this juncture. So with that, no change. Still below the 21,610 short-term pivotal resistance level, still maintaining that intraday bearish bias. First support level to watch will be 20,890, which is the congestion area of last Friday and this Monday. Only a breakdown below 20,890 may open up scope for further potential weakness to expose the next near-term support zone at 20,210, 19,970. Only a push-up and an hourly close above 21,610 will expose the next near-term resistance level at 22,240, which confluence with the 50-day moving average. I think as a similar resistance level as well. So RE in a nutshell, still watching the 21,610 short-term pivotal resistance on the Germany 30, representing the German DAX, in order to maintain our bearish bias with a first support level to watch at 20,890 for today. Okay, so that's for the Germany 30. Onward next will be the major US Wall Street indices, starting with the US Wall Street 30. So the US Wall Street 30 managed to stage that bearish breakdown below the first support level, which is at 39,950. So this level now turns into a pullback support over here. Turns into a pullback resistance. Sorry, what I'm talking. Okay, turns into a pullback of a support, a minor support broken, turns into a minor pullback resistance, and right now it's testing this level at this juncture. So what you could see over here is that the hourly RSI hit the almost hit the oversold region, but didn't shape any bullish divergence. So this is a lower low on RSI and a lower low on the price action, so there's no bullish divergence. All right, so there may be some form of a bounce taking shape for today. So with that, let's us have an adjusted pivot level for today. So previously we have a short-term pivotal resistance at 41,180. Since it's already broken down below the first support level, let's have adjusted pivotal resistance for today at the minor swing high area of 14th of April and 15th of April, which will correspond to the 20-day moving average, acting as a resistance level as well. So this will be my pivotal support for today. Okay, which is 40,760. 40,760. Okay, over here. Next support level to watch will be 39,090, which is the minor swing low area of 10th of April and 11th of April, last Friday. A breakdown below 39,090 may open up scope towards the next near-term support level at 37,900, which is the minor congestion area of 9th of April over here. So only an hourly close and a push up above 40,760 that would invalidate today's intraday bearish bias to seek a retest at 41,180. Above it may see a further extended counter trend rebound rally sustain to test the next near-term resistance level at 42,400, which correspond to the intersection between the 50-day and the 200-day moving average, where the 50-day moving average just did a bearish crossover below the 200-day moving average. We also signified the return, the potential start of another impulsive downward sequence on the US Wall Street 30. Okay, so i.e. still maintaining that bearish bias on the US Wall Street 30, but given that it has broken below yesterday's minor support at 39,500, now it turns into a pullback resistance. Now we will have a slightly adjusted downwards short-term pivotal resistance level to 40,760 for today. Next up will be the Nasdaq 100. All right, so the Nasdaq 100 at this juncture, you also broke down below the first support level at 80,580, hit our next support level at 80,130 before bouncing in today's Asia session. All right, so this will be a pullback resistance over here. Okay, at 80,656. Okay, so this will be like a first support level to watch. Okay, 80,125. Okay, and what I could see over here is that the short-term pivotal resistance level is almost coming very close to the 20-day moving average as well as 19,050. Okay, so what I can do now is let me do some adjustment over here. Okay, so it's still a zone, all right. So 19,060, 19,280, all right. So it's still very, it's not so significant. This level here, this 19,050, which is the 220-day moving average. All right. So because of this, I don't want to tighten it so much to 19,060. So it's like a zone to me. 060. So I still put it over here. All right. So I'm still using the 19,060, that's a lower limit. So there's an upper limit exactly at 19,280, which is very close to it as well. So no point tightening it to be at 19,060. All right. So still maintain it. So it's like a zone. So the upper limit will be at 19,280. So still maintaining that short-term pivotal resistance at 19,280 because it's the zone, that's the upper zone. And we will still maintain that intraday bearish bias. So another omen to look out for is the bearish crossover of the 50-day moving average below the 200-day moving average. We also represent or supports the ongoing motion that we may kickstart another round of impulsive downward sequence on the Nasdaq 100 within its ongoing medium-term downtrend phase. All right. Next support level to watch after 18,125, which is the minor swing low area of 17th April, may expose the next support level in near term at 17,410, which is the congestion area of 9th of April and 9th of April and 8th of April over here. Only a push up and hourly close above 19,280 will invalidate today's intraday bearish bias to see a squeeze up for an extension of that minor corrective rebound scenario or extension of the dead cat rebound scenario to expose the next intermediate resistance at 20,350, which correspond to the 200-day moving average closely as well. So i.e. in a nutshell, still maintaining that intraday bearish bias on the Nasdaq 100 at 19,280 and watching very closely the first support level at 18,125. All right, so that's sum up the intraday technical outlook on the major stock indices. So let us turn our focus now towards the commodities market, starting with the gold XAU/USD. So for gold XAU/USD, it rallied as expected, hit our resistance level 33,325/33,000, 33.35, almost hit the next resistance at 33.72. In today's Asia session, it printed current fresh intraday all-time high at 33.57. All right, give or take. So given that the hourly RSI had hit a rather extreme overbought level, okay, so this extreme overbought level is the most since in the last 6 months or so. Okay, over here. Okay, so this is a rather high extreme overbought level, but in this extreme overbought level, the RSI does not flash a bearish divergence. All right, it continues to see higher high in line with the price action as well. So now you really start to exit from the overbought level. So there is a risk that you may do a minor pullback today in first step to retest the first support level to watch for today will be at the 3,287. We also close to the lower boundary of this minor ascending channel as well over here, but I don't put it so tight at 3,287 just in case of any whipsaw. I'll put it slightly lower on the short-term pivotal support for today, an adjusted one, which is the minor swing high area of 11th of April and 14th of April, tested 2 times over here. Why this level is important? Because after it tested, it did around 2 days of sideways motion before staging that bullish breakout. So this is definitely a much more important level compared to just this minor, we call it a meeting line between 3 hours of candle. Right, so this level is not so significant as compared to the 3244 level, because previously after hitting 3244, it did almost 2 days of consolidation before staging that minor bullish breakout. So for sure, this has a higher significant psychological impact on the markets based on the technical analysis perspective. So as long as the minor pullback didn't surpass below 3244, means 3244 short-term adjusted short-term pivotal support that I have for today on gold XAU/USD, we will still maintain that bullish bias in order to continue for it to continue its impulsive up move sequence above 33,072, exposes 3414 next, which is the 0.764 Fibo extension, and also close to the upper limit of this ongoing minor ascending channel from the low of 9th April. Only an hourly close and a breakdown below 32.44 will invalidate today's intraday bullish bias, pardon me. A breakdown below 32.44 pivotal support will invalidate today's intraday bullish bias to kickstart a minor corrective decline sequence, exposing the next near-term support area at 32.11/31.96. Below it says 31.68/31.29 next, which confluence with the rising 20-day moving average. So i.e., in a nutshell, there could be some form of a minor pullback taking shape during the European session because of the prior extreme overbought level that has been met, and the RSI has just exited from the its hourly RSI has just exited from the overbought region, increasing the odds of a minor pullback. So minor pullback, first support level to watch will be 32.87, but as long as this minor pullback didn't break below 32.44 adjusted short-term pivotal support for today, thereafter there could be another leg of impulsive up move to resume on Go XAU/USD. Two key support level to watch for today on the intraday basis: 33.72 followed by 34.14 next. So that's for Go XAU/USD. Lastly will be that West Texas crude oil. So the West Texas crude oil yesterday did a bounce over here, but this bounce doesn't seem to be quite convincing. If you look at the bounce, it continues to travel in a very small little candlestick body on an hourly basis. So this represents also hesitant by the bull to actually push it much higher. So still no change, still watching the 63.36 short-term pivotal resistance yesterday, where we flipped to a intraday bearish bias. But first support level for today to look out for to maintain our intraday bearish bias for West Texas crude oil will be the minor swing low area over here. Okay, at 60.08, right, 60.08, which is also close to yesterday's V-shaped rebound during the start of the European session, but then after it's grind higher, but the way it grind higher, it starts to form a small little candlestick body, so it's not so convincing in terms of bullish momentum. So this will be the first support level to watch: 60.80 or 8, pardon me, not 80, 60.08. Okay, come on, why is it so long? Okay, 60.08. So this will be my first support level to watch. A breakdown below 60.08 will expose 58.30 next. However, if price action still have an hourly close and a breakout above 63.36, then today's intraday bearish bias will be invalidated to see the continuation of that minor counter trend rebound sequence extension to expose the next near-term resistance level at 65.40 next, which correspond to the downward sloping 20-day moving average. So i.e., in a nutshell, I'll be watching 63.36 short-term pivotal resistance in order to maintain a bearish bias on West Texas oil. First support level to watch will be 60.08 for today. All right, so that sum up the intraday technical outlook on the broad-based cross asset classes. So before we go, let's have a quick look on the economic calendar and other earnings calendar to see what are the key events to look out for today's Asia session. So let's start with the earnings calendar first. Why? Because in today's Asia session at 2 p.m. Singapore time, we have TSMC. So why TSMC important? Because it's the world's largest contract semiconductor manufacturer. Earnings report will be out. So any signs of weakness or any earnings with any form of what I call lackluster guidance, I would say, up from TSMC later when they announce its Q1 earning will be at 2 p.m. Singapore time, could create a ripple impact on the stock indices. All right, thereafter, because they call yesterday ASML did a rather negative guidance on its earnings outlook, so that created that risk of impact on the major US stock indices as well, right? So something to look out for TSMC earnings release and its press conference that will be out at 2 p.m. Singapore time today. All right, then other economic calendar right now during the European session over here. So during the European session, the most important data out for today will be ECB at 8 event. I would say event, not data. Will be ECB interest rate decision at 8:15 p.m. Singapore time. So market is expecting the key deposit facility rate to be reduced by 25 basis point to from 2.5% previously. So however, this today's cut potentially might be the last cut by ECB, because I explained that right now, due to that rather aggressive fiscal policy stance that is undertaking by the new German government, that could replace prior accommodative monetary policy up from ECB. Right, so that could be the replacement. So ECB now may take a back seat uh, to take a back seat right now in its ongoing monetary, especially monetary policy. So something to look out for, and that guidance or that hint might come at the press conference by ECB President Lagarde at 8:45 p.m. Singapore time. All right, so this is also something to look out for as well. So during the US session, there is no clear tier one data to look out for today. All right, so earnings fronts will be important in US because we have United Health that will report its Q1 earning before the start of today's US session. That means before 9:30 p.m. Singapore time. So why United Health is important? Because United Health is the heaviest weighted component stock in the Dow Jones Industrial Average. So that means IE is the number one heavy weighting stock, heavy weightage market weight cap in the Dow Jones Industrial Average that could impact the movement more significantly in our US Wall Street 30 index. All right, so something to take note of. On its earnings announcement, United Health, before the start of today's US cash stock market trading session, which is at before 9:30 p.m. Singapore time, and thereafter, right after the close of today's US session, which is at 4:01 a.m. Singapore time tomorrow. That means Friday, early Friday tomorrow, 18th of April at 4:01 a.m. will be the release of Netflix, right? Q1 result. Why is it important? Because Netflix is the top 10 component weightage stocks in the Nasdaq 100, which may see some form of feedback loop in terms of the price action that it could trigger on in the Nasdaq 100 and also in some form the S&P 500 as well. So that's the Netflix. And back to the calendar again. So the economic calendar in early Asia session tomorrow, that means on Friday, 18th of April at 7:30 a.m. we have the release of Japanese inflation. So do take note of the core inflation number. Market is expecting higher to be at 3.2%, above 3%, and also a slight uptick by trading economic forecast of the core rate, which is this rate itself is excluding food and energy, which is much more watched by Bank of Japan officials. For they want it to actually maintain above their targeted level of 2%. So based on trading economics forecast, is they're coming in at 2.7%, 1 basis point higher than 2%, 2.6% from the previous month of February. So something to take note of, because that could potentially influence the rate of the dollar yen as well. If Japanese inflation continues to remain stable, the yen may continue to strengthen against the dollar. That means the dollar yen may continue to inch downwards within our expectation. And also not forgetting, today will be the second day of this ongoing US and Japan trade talk. Today will be the second day. So do look out for any usual progress that or usual update that could be out from Trump himself after the end of today's US session. That means i.e. tomorrow after 4 a.m. Singapore time. All right, so that could influence the broader market because of this sensitivity that it has towards the market, because it's pertaining to trade tariffs. All right, so with that, that ends today's daily dose of market insights. I'm Kelvin here, and tomorrow will be a public holiday. So those who are celebrating, I wish you a blessed Good Friday. So tomorrow there'll be no daily dose, and daily dose will be back again on next Monday. So do have a long weekend, restful weekend as well. This is Kelvin here, signing off. Thank you.